Ladies and gentlemen, welcome once again, my dear listeners and viewers, to Mali Investment Talks, a video session, a YouTube channel through which I share with you tips about passive investing with the ultimate goal of financial independence, financial security, right? Now, ladies and gentlemen, my name is Joseph Areu once again, and I'm calling upon you as always to like my videos, share them, and to subscribe or ask your friends to do the same. So, ladies and gentlemen, the main theme I have been discussing lately has been tips about managing your portfolio. I would call them high level tips. For details, I encourage you to talk to your investment advisors. Do get in touch with me and we can discuss details. But these are basically high level tips, right? In particular, in this particular session, can I invite you to listen to some tips about retirement investing, or if you like, your retirement investing portfolio. What kind of assets should you have in there? What are the issues? So, retirement, that means you've left paid employment. You're probably in your mid 60s or even more like early 70s. That's the kind of time I would expect you to be thinking about, or not just thinking about, but basically to be investing in a retirement portfolio. First things to say about that, so when you invest for retirement, I want to urge you to realize or to keep in mind something that I said earlier. You are investing not necessarily to get rich. You are investing in order not to get poor. That is the key. Do many people, many retirees or soon to be retirees come to me, or you hear them talking about how they are looking for the highest return, shares I hear can double your money in a very short time. That is dangerous. I'm not saying there's anything necessarily wrong with investing in a particular asset class, whether shares or whatever, but you want to be sure that the portfolio you're investing in, the assets you're investing in, is consistent with your objective at that stage in your life. So you are not looking to get rich, you are looking not to get poor. In fact, I would say the one biggest risk that you want to avoid when you invest for retirement is the risk of outliving your money. Many of us have a tendency of thinking that, it won't be long before we're dead. So after leaving your job, you give yourself maybe 20 years maximum. Guess what? You could find yourself living for 40 years or even 50, God willing. And then what? Whatever you had put aside for investment probably has run out. And then you're in trouble. Not only have the funds run out, even your kids, if you had them, have run out from your nest. They are living their own life. Then you are in big trouble. So you want to try and minimize the risk of outliving your money, making sure that your money, you will have some cash flow for the rest of your life. So what are the priorities when you are investing for retirement? Like I said, these are high-level tips. You can talk to me or anyone else for the details. What are the priorities? Number one, you absolutely need to control the risk. when you make this investment. Risk is probably the key issue. I've just talked about the risk of outliving your money, the risk that you could just lose your money. Something that happens, something happens to whatever you've invested in, and your money just disappears. Or the risk that the market gets so bad that the returns are so low, although that to me is not maybe a very, very big risk. It can happen. But the risk that you could lose your money, the risk that you could outlive your money. So you want to absolutely be sure that that risk is under control. So what does that mean? You want to place some of your money in asset classes which will ensure that you get an income for the rest of your life, even if the return may not be so high. Think about annuities, for example. Think about fixed income, but preferably with issuers like sovereign issuers, meaning governments, government treasuries, and things like that, or a combination in consultation with your investment advisor. Number two, second very important priority is make sure that your investment portfolio has sufficient liquidity. Avoid a situation many retirees find themselves in, which we call being asset rich and cash poor. So in my country, people like investing in real estate, for example, but they forget, and there's nothing necessarily wrong with real estate, except that when it comes to retirement time, it's unlikely to give you the liquidity that you need. What does liquidity mean? How easily can you liquidate? Can you sell? Can you transform your asset into cash as and when you need it? And that could be for all manner of reasons, medical reasons and medical emergencies and so on and so forth. So you want to be sure that at least some part of your portfolio can be easily liquidated as and when you need it. I am not saying necessarily that all your assets must be liquid, but it is suicidal in retirement to be investing your entire portfolio in illiquid assets, assets which you cannot easily sell. Or some of them you can sell but at a high cost. It's not necessarily good either. So what are liquid assets? Well, some securities are pretty liquid. Again, unit trusts can be liquid. Fixed income assets like bonds, treasury bills, it's very easy to sell them. Well, shares can be liquid, except shares are very risky. So you need to ensure that balance or manage that balance. Thirdly, then you want to make sure that there is some return. You do not want a situation where all your assets are extremely low return, maybe even negative return, because then that will affect the sustainability of your portfolio going forward. So you want to make sure there is some decent return, not necessarily too high, because too high will mean a lot of risk. But again, I keep saying, you want to at least be able to beat or equal inflation. You do not want the purchasing power of your assets, of your investments, to deteriorate or come below what inflation is. All right, so three things. One, number, that is risk control. Two, liquidity. And three, returns. In that order, I might add. And again, remember, when you're talking about risk, one big risk that we seldom think about is the risk of outliving your money. Never, never look down or upon that, or never forget that. Ladies and gentlemen, thank you very much, as always, for listening. And I do look forward to talking to you again. So keep tuning in, liking, sharing, and subscribing to my videos. Thank you.